Hey everyone, welcome back to Corporate Decoder today. New Mountain Private Credit Fund just filed an 8K, and I am seeing a few key things that tell us about their recent financial activity and outlook. Quick note, this is not financial advice, just my take on public filings for educational purposes. We'll break down their latest sales, distributions, and net asset value to see what is really going on. So what is this filing all about? It is an 8K, which is basically a way for public companies to announce big events that investors should know about right away. Think of it as a company's urgent news bulletin. The company we are looking at is New Mountain Private Credit Fund. They are involved in private credit, which means they lend money to companies that might not be able to get loans from traditional banks. This can be a bit riskier, but it can also offer higher returns. One of the main points in this filing is about selling shares. The company tells us they sold about 5,421 shares of their common stock in August 2026. This was part of an ongoing private offering. The total money they got from this was about $0.1 million, meaning each share cost around $23.06. They are saying this sale was exempt from the usual registration rules because it was a private deal, which is pretty common for funds like this. Next up, they announced a distribution. This is like a dividend where the company pays out some of its earnings to its shareholders. For August 2026, they declared a regular distribution of $0.19 per share. This money will be paid out in cash or reinvested into buying more shares for those who are part of their dividend reinvestment plan. The important dates here are that shareholders of record as of the 31st of August will receive it, and it is expected to be paid around the 30th of September. Hey, if you find these deep dives into company filings valuable, you should really check out Decoder.report. It's where we keep an updated page for every stock we cover, including New Mountain Private Credit Fund. You can see things like a risk score, red flags pulled directly from filings, how fast shares are being issued, and an overall screening verdict. The direct link is in the description and the pinned comment, so you can open it up later while rewatching. Now, let's get into the numbers that really matter for a fund like this, its net asset value, or NAV. As of the 31st of July 2026, the net asset value per share was $23.06. This is the same price they sold shares for in their private offering, which suggests the market price is closely tracking their underlying value. Looking at the bigger picture, the company's total net asset value was about $956 million. This represents the total value of all the assets the fund owns, minus its liabilities. Their investment portfolio was valued at a substantial $1,866.2 million. This is the total worth of all the loans and other investments they hold. Now, it is important to see how they finance these investments. They had about $918.7 million in debt. This means they borrow money to amplify their returns, which is typical for credit funds. This brings us to their leverage ratio, which was around 0.96 times for July. This means for every dollar of equity they have, they are borrowing about 96 cents. This is a moderate level of leverage, not excessively high, but it does add risk. An interesting point here is that 100% of their leverage is floating rate. This means the interest payments on their debt can change as market interest rates change. If rates go up, their interest expenses will go up, which could impact their distributions and NAV. Conversely, if rates go down, they could benefit. The filing also gives us a snapshot of their ongoing private offering. For August 2026, they sold 5,421 shares for a total of $125,000. This is interesting because the earlier mention said $0.1 million, which is $100,000. There seems to be a slight discrepancy here between the text and the table. However, the price per share works out to be around $23.06 in both cases, so it is likely a rounding difference or a slight reclassification of consideration. They plan to keep selling shares monthly. Finally, we see the signature of Eric Kane, the corporate secretary, confirming the accuracy of this report. So what is the story here? New Mountain Private Credit Fund seems to be operating smoothly, continuing its private offering and making regular distributions. The NAV is stable and aligned with their share sale price. Their leverage is moderate, but the full floating rate exposure is something to watch as interest rates fluctuate. The risk I am watching is how their floating rate debt might impact earnings if interest rates continue to rise. What I am actually looking for is to see if they can maintain their distributions and NAV in a potentially higher interest rate environment. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.